Are you worried about falling into debt or damaging your credit score? You're not alone. In 2026, managing your credit and debt is more important than ever. With the rise of buy now, pay later, BNPL services, subscription-based models, and identity theft, it's easier than ever to get into financial trouble. But the good news is, there are ways to protect yourself from bad credit and debt. In this video, we'll cover the top 5 ways to keep your finances in check, from freezing BNPL options to building a subscription firewall using virtual cards. Stick around, and don't forget to like, share, and subscribe for more tips. 1. Implement a BNPL freeze on your credit profile. In recent years, buy now, pay later, BNPL services have become incredibly popular. These services allow you to purchase products immediately and split the cost into interest-free installments. Sounds like a great deal, right? However, BNPL services often don't report your payments to credit bureaus unless you miss a payment, creating what's known as shadow debt. While the lender can't see this debt on your credit report, your bank account certainly feels a strain when those installments come due. To prevent yourself from falling into this trap, consider implementing a BNPL freeze. One way to do this is to use Opt-out Prescreen, a tool that lets you stop receiving pre-approved credit offers. This can significantly reduce the temptation to sign up for BNPL services. By not receiving pre-approved offers, you avoid the frictionless, high-interest impulse debt that these services can create. Another crucial step is to manually disable BNPL options in your digital wallets. Many digital wallets now store BNPL payment options for various services, making it easier for you to fall into the trap of impulse purchasing. Disabling these options ensures you don't accidentally sign up for services you don't need or can't afford, protecting your financial health and helping you stay debt-free. The key to managing BNPL services responsibly is prevention. By making small adjustments, you can protect your credit score and bank balance from the hidden risks BNPL services can pose. 2. The micropayment strategy for credit utilization. One of the most important factors affecting your credit score is credit utilization, the ratio of your outstanding credit card balances to your available credit limit. High utilization, using more than 30% of your credit limit, can hurt your credit score, even if you always pay your bills on time. However, a micropayment strategy can help you keep your utilization low and your credit score high. In 2026, credit scoring models will start to favor those who consistently maintain low utilization rather than just paying off balances at the end of the month. To implement this strategy, consider making weekly micropayments via your banking app instead of waiting until your statement date. By paying off smaller amounts more frequently, you keep your reported balance close to zero throughout the month. For example, instead of waiting for your credit card bill to arrive, set up automatic weekly payments that reduce your balance. These payments help keep your credit utilization low and boost your score by showing that you're consistently managing your debt. Even a small decrease in your credit card balance each week can have a significant impact over time. Additionally, this strategy makes it easier to manage your finances and avoid surprises when your statement arrives. By breaking down payments into manageable amounts, you're less likely to miss due dates or overextend yourself financially. This strategy is simple but effective. By implementing micropayments, you avoid the risk of letting your credit card balances get too high, and you'll have a healthier credit profile, which can save you money in the long run by qualifying you for lower interest rates and better credit terms. 3. Establish an identity lockdown with a credit freeze. Identity theft is one of the most common causes of accidental bad credit. Hackers can open new lines of credit in your name, racking up debt and damaging your credit score before you even realize it. This can be especially damaging, as many people don't notice the fraud until it's too late, often leading to months or even years of credit repair. Fortunately, in 2026, there's a simple solution to prevent this from happening: a credit freeze. By freezing your credit at all 3 major credit bureaus, Equifax, Experian, and TransUnion, you make it impossible for anyone, including hackers, to open a new line of credit in your name without your explicit authorization. When your credit is frozen, lenders cannot access your credit file, effectively locking down your identity from fraudulent activity. This gives you peace of mind. knowing that unless you choose to unfreeze your credit, your personal information is protected from malicious actors. Freezing your credit is free and can be easily done online through each credit bureau's website. When you need to apply for a loan or credit card, you can temporarily unfreeze your credit using a PIN or password. This gives you full control over who can access your credit file and prevents unauthorized access from those looking to exploit your information. The process is quick and straightforward, taking only a few minutes. In addition to freezing your credit, it's important to regularly monitor your credit report for any suspicious activity. While a freeze stops new accounts from being opened, regular monitoring helps you spot any errors or signs of fraud early. You can set up alerts with the credit bureaus to be notified of any changes, further enhancing your protection. By setting up an identity lockdown with a credit freeze and maintaining regular monitoring, you can protect yourself from identity theft and safeguard your credit score from accidental damage, ensuring your financial health remains intact. This simple, proactive step could save you a lot of time, money, and stress down the line. Audit your clout-based recurring costs. One of the most insidious forms of bad debt often starts with the need to keep up appearances. Many people fall into the trap of spending money on status symbols, such as an expensive car or a luxury lifestyle, that they can't afford. These clout-based expenses often lead to high-interest debt and make it harder to build wealth in the long run. To protect yourself from bad credit and unnecessary debt, start by auditing your recurring costs and eliminating any expenses tied to social status. For example, a car payment that takes up more than 15% of your monthly take-home pay might be a good target for downsizing. Use tools like CarEdge to calculate the total cost of ownership for your vehicle, including insurance, maintenance, and depreciation. You might find that switching to a more affordable car can save you thousands of dollars each year. Once you identified areas where you're overspending on clout items, consider downgrading assets that are depreciating faster than you can pay them off. This includes things like luxury cars, designer clothing, and expensive gadgets. By focusing on functionality over status, you can free up more money to put towards savings, investments, and paying off high-interest debt. By auditing your clout-based expenses, you can avoid lifestyle inflation and make smarter financial decisions that will protect you from falling into debt. 5. Build a subscription firewall using virtual cards. One of the biggest traps people fall into is zombie debt. Unwanted or forgotten subscriptions that continue charging your account even after you've stopped using the service. This kind of debt can quickly spiral out of control as small charges add up over time. Fortunately, there's a way to protect yourself from this type of financial leak using virtual cards. Privacy.com and similar services let you create virtual cards for subscriptions. These cards allow you to set hard spending limits or even single-use parameters for specific services. For example, you can create a virtual card with a $10 monthly limit for a streaming service. If the service tries to charge you more or increase your rate, the transaction will be automatically declined, preventing any unwanted overcharges. Using a subscription firewall with virtual cards ensures that you have full control over your recurring expenses and protects your bank balance from unwanted charges. It's a simple, effective way to avoid overdraft fees and ensure that you're only paying for the subscriptions you actually use. Over time, this can help you reduce your financial stress and build a healthier financial profile. And there you have it, the top 5 ways to protect yourself from debt and bad credit in 2026. From freezing BNPL options to building a subscription firewall, these strategies can help you maintain a solid financial foundation. Which method are you going to try first? Let me know in the comments below. Don't forget to hit that like button, subscribe, and share this video with someone who needs these tips. Stay in control of your finances, and I'll see you in the next one.